Hey everyone, welcome back to our live trading session. And obviously this is for the CPI numbers, and yeah, this is going to be significant. I think we are quite done with the whole tariff stuff, as we discussed on the outlook. Very interesting development, obviously. All right, audio is coming through okay on my side. Just let me know if there's any issues. But yeah, we'll get started for tonight. And I think we are looking at early reactions in the market. I think the market is pretty much starting to move already at this point in time. All right, let's continue on. My name is Jaro. Let's get started with news trading session number 3, and this is for our inflation numbers, and very interesting numbers to look at. But yeah, any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to high trading risks and delays in order execution. So be very attentive when determining the volume of your transactions and consider all possible risk factors. All right, just a little bit about myself here. My name is Jaro, and I am a global macro strategist, institutional market analyst, as well as the Ichimoku specialist here. And I have over 20 years of professional trading experience across Forex indices, commodities, futures, with institutional grade executions. But yeah. I'm also a former head technical analyst at GFT Markets, which is now part of Gain Capital, Forex.com, working alongside Kathy Lee and Boris Schlossberg, if you guys are old enough to even know who they are. But yeah, I'm also ex-head strategist for Invest Japan, designing structured macro playbooks, as well as technical FX strategist for Asia's advanced brokerage environment. All right, yeah, I do. This is already a lot. So what do I do? Do I manage stuff? Yeah, I do it, but I don't do retails. I don't do copy tradings. I do manage family offices, and yeah, with over 20 million of AUM. And that's pretty much it. Everything else you guys probably know from all the stuff there. Probably saw me on TV about 10 years ago and stuff like that. And occasionally still appears there. And yeah, let's get started, and gonna give you a bonus for participating tonight, which is gonna be on the next slide, and you should have access to the private Telegram channel if you have attended the previous sessions before. This is the code. It's non-farm 2025. Make sure you use the code if you want to, get your double deposit bonus, and you're kind of running out of codes. You can use the code, right? If you need the code for later, just save it up. Just make sure you use it before you deposit into your Octa trading accounts. That is still valid until the 31st of December 2025. Okay, we're gonna go through with some of the theory first. So inflation, very simple, right? It is basically the rate at which prices for goods and services rise, and this is the most commonly used inflation. This is basically the CPI numbers as well as the core inflation numbers. And this is actually going to be very interesting. We're basically back into that scenarios there, and you can thank Trump for that. Adding tariff into the US. That's obviously going to drive prices up, right? People are not stupid enough to think that, oh, if I'm having to pay more for the stuff there, inflation is going to go down. No, obviously inflation is going to go up. Cost of goods are basically going to go up. Producers' prices are going to go up, and that's going to get passed on to consumers. So it is a vicious cycle, and a lot with what's been going on ever since Trump's gone to office this year is basically going to influence the inflation numbers, and this is probably why we were looking at the FOMC last week, and we say, they're not going to be doing anything much. They can't do anything much, and that's basically the same thing, right? We already talk about that every week on the outlook there. What's the potential outcome and stuff like that, and with the FOMC, it's kind of something that I would say, yeah, I don't like to say that, oh yeah, it's 100% this, 100% that. But what the FOMC did was basically 100% guaranteed that they are going to do that. And basically the answer to the FOMC is they're not able to cut interest rates because tariff being imposed could do a lot of damage. It could push inflation up, even though it's short term and whatnot. Anything short term can lead into long term inflation numbers, and that's the reason why the FOMC needs to be a little bit more on the careful side, and that's the reason why the FOMC is not cutting interest rates. So, if you don't get it by now, obviously. Inflation numbers and the labor numbers, which is the two live trading sessions that we do, those are the two factors that governs what the FOMC or pretty much every central banks out there in the world in terms of what their mandate is, right? The FOMC's mandate is pretty simple. They have a dual mandate, which is to keep the labor market healthy and also to keep the stability of price, which is control inflation, right? Those are the dual mandates. We got the job numbers, and not really concerned about the job numbers last week. So 2 weeks ago, we were not really concerned about the job numbers, and back then, it was, as I said, it's not going to move the market a lot because a lot of the attention is basically on tariff. Now, I'm going to pause here for a little bit, and I'll explain to you what's going on here. If you have been watching the Outlook on the one that's published yesterday, I know it might came in late because by the time that Outlook is published, a lot of things have changed, right? We had the talks between the U.S. and China in Geneva, and obviously we have the results right now. That's why you saw the market kind of rally up yesterday. We saw all safe havens get smashed down. Gold was pretty much losing a lot of its shine there because there's not a lot of concern that things are going to get worse, right? For now, right? But the tariff that was rolled back with China, it wasn't a trade deal, right? I think we posted it out and I mentioned that it wasn't a trade deal, no matter what they want to say it, right? I know China didn't say it was a trade deal, but for Trump, obviously he believes that was a trade deal. It is not a deal. It's basically just rolling back to everything else. And then they're going to start constructive talks in terms of achieving their deals. But yeah, a lot of the tariff was rolled back. But if you think about the 10% tariff that was actually imposed, 10% tariff as a base for whatever trade deals that Trump wants to put out there, it's still the highest tariff ever imposed by the United States, right? And the last time tariff was that high, it triggered a Great Depression. So that's the reason why everyone was really paying attention to what's really going on in the market there. So. Yeah, so those are the kind of explanations, catching you guys into what we are anticipating tonight, brings in the context into a lot of the stuff here, which is something that I want to talk about a little bit later on. But a little bit of a theory, if you guys are new here. So what is the CPI? So CPI is obviously, it is a critical indicator of pricing pressures in the economy. If it goes up, then obviously cost of prices is going up, and then people are going to have to spend more to buy stuff. Basically, the consumer price index, it's basically what inflation is. Very simple as that. So if anyone asks you, oh, what is the inflation numbers? Everyone's just going to refer to the CPI number as the inflation number. So, sometimes you see the report as inflation numbers here and there. If, people say it's inflation number is the CPI numbers that we're looking at. Okay. So we got obviously the headline inflation, which is the CPI numbers. And that's basically what we're looking at. And I already talked about how it can lead to changes in the monetary policy, and whether or not it can strengthen or weaken the currency, really it's out of context at this point in time, right? So the CPI, what does it do? It basically measures the cost of living, and it includes broad range of goods and services purchased by consumer. It also includes international personal consumption items, and this could be what's driving the inflation numbers up in the short term, because if someone's in the US and they start importing stuff from China, there was a little bit of a rollback right now, but it's still high, right? It still got tacked on 10%. The mini-me's was, reset yesterday as well. I think it was an added bonus from the US, but I don't think anyone cares at this point in time. But yet, if you guys don't know what the mini-me's are, so any items that's under $800 in the US doesn't get taxed. That was rolled back. It was actually removed by Trump, and then everyone was panicking. that was rolled back. All right. So international personal consumption items is going to be included in CPI, and then the scope itself excludes changes in interest rates or costs. Okay. So that's the CPI. The PPI that we're going to be looking at tomorrow, I believe. This one here measures real growth in output. It includes items produced for personal consumption. It doesn't include imports, but if we think about, for example, automotive, just to give you a little bit of a case there, there's a tax on automotive parts. It was reduced and whatnot. I think it deals with the UK. I think auto imports are not going to be tariff, but I think there's a limit to that. I believe it was only just about 10,000 units of cars, I believe, if I'm not wrong. But it wasn't a deal, right? It's just basically a little bit of a framework into stuff. So whatever Trump is saying, if there's a deal and whatnot, it's technically still not a deal, All right, so CPI is Consumers Price Index. That's basically what we pay if we buy stuff. The PPI is how much it costs to produce it. So with the whole tariff issues are, let me give you an example, right? If you buy your Nikes are made in Indonesia, okay? So if Indonesia get tariff a lot, then stuff that was produced in Indonesia that goes back into the US, we sold there, obviously gets tariff as well. And then the PPI would go up. This PPI would then either be absorbed by the company or it's going to get passed on by consumers. The companies are not stupid. They'll pass it on to consumers. So everyone's just going to pay more, and that could be a trigger of the CPI going up. And that's the reason why the FOMC is not really going to be doing a lot until the whole tariff situation in terms of what Trump wants to do, it's clear, right? Or deals are done, then they can start formulating, how's the impact. Obviously, at this point in time, there's a lot of confusion in the market as well, with the rollbacks here and there. Every 48 hours, Trump was just flip-flopping the market there. And obviously with China, we got a rollback on the whole tariffs, right? 145% from the US to China, and then to the US 125%. It was all rolled back. Now everyone is just back to 30% and I believe 10% from China. But yeah, it's gone. So what's going on, right? Everyone that starts pricing in for this tariffs to kick in April, start shifting their productions and whatnot. It's all over the place right now, and obviously that's going to cause a lot of all these numbers that we're going to be looking at, which is the hard numbers, and those are going to be the published data, to be a little bit more on the skewed side. And that's the same thing that we're expecting here. All right, the other set of data that we're looking at is obviously the core inflation numbers. Now the core inflation numbers is pretty simple. Core inflation numbers, basically it's the CPI excluding the fresh produce, right, for foods and energy sectors. Those are going to be excluded from the core inflation numbers. Now, obviously, the core inflation number is the more stable inflation number. This would be the reference points for, the FOMC, for example, right? As for the Feds to, consider whether or not there's a lot of inflation, they're going to be referring to the core inflation number to see the underlying inflation, okay? All right, so those are the theories. It's very simple, right? If you guys have any questions regarding what's really on the macro, feel free to ask. But I think I did explain a lot on the theory session last week. These are the numbers that we're looking at. Again, I think we're going to be looking at the skewed numbers here. But inflation rate for April, which is headline inflation, right? The CPI year on year, is expected to be about 2.4%. Now, the consensus obviously ranges. In terms of the consensus, 60-40 is actually split between 2.4% and 2.5%. I'm one on the side where, I don't really think this could be a good reference point at this point in time. I'm not really sure if April number is going to have a lot of impact onto the inflation because a lot of the tariff doesn't kick in until about mid-April, or some of them kicks in May. I think we might see this lower inflation number, but is this inflation number reliable going forward into the future? That's a question that a lot of traders are asking. A lot of economists, analysts, bankers, they're asking the same thing. Is it going to be okay at this point in time? So expected here unchanged 2.4%, monthly rate of change at 0.3%. I think this is normal. 0.3% is kind of the standard for the monthly rate of change for inflation. The core inflation expected to remain stable as well at 2.8%. So if we take a look at the consensus, numbers for tonight, if it all comes in as per consensus, it's unchanged, right? Unchanged doesn't mean it's not bad. Unchanged at this point in time is actually really bad because this is unchanged in the month of April before all the tariff, before the higher prices and everything else kicks in. But once it starts kicking in, obviously that's going to send inflation up. So this is the context into what we are looking at here. The other question is that I get asked a lot this week is this going to have an impact onto the US dollar in terms of the strength and whatnot? I think the reset that happened yesterday brings a lot of balance back into the US in terms of the economic stability. That for now it is aligned, right? So inflation goes up, the USR is likely going to go up with that. The treasury market has stabilized. We did see a little bit of a sell-off in safe haven assets there. So we got Swiss franc, the Japanese yen, gold losing a lot of its value there. If you guys are wondering what's really happening, and yeah, that was pretty much the rollback on China. But there is a but to that, right? There's a lot of fine prints into the negotiation, and I think one of them that really I'm concerned about is, they'll go along for as long as they are happy with each other, which is going to be a problem. And it's not going to be a permanent rollback. It's just 90 days pause. No, deals are not going to be done in 90 days. And this is something that I've already said ever since the month of, April, that Trump's 90-day pause, it doesn't really mean anything. No deals are going to get done in 90 days. For countries to have deals done, it takes forever. It takes months, at least 6 months, the earliest for any trade deals. But yeah, expedited 200 deals, not going to happen, right? It's just not going to happen. So it is what it is. Okay, so impact on this, inflation numbers. If it's high, is it going to have a huge impact into the market? Yes, it will drive the US dollar up. Now the question is, how high is that inflation up, right? If we have a ridiculous number, for example, if we saw the last month inflation, which I doubt it will happen, right? It's not going to drive, the CPI numbers from 2.4 to 3%, for example, but it might drive it up to maybe 2.7, 2.8%. If that happens, then yeah, it would be a strong boost for the US dollar, but it's not going to be for the long run, because if that happens, then everyone starts figuring out that, oh, no, you know what, we're not even looking at tariffs kicking in and inflation's already shooting up, then yeah, it really depends on what the sentiment is in the market. But traders could change their mind and say, oh no, you know what, high inflation, no rate cuts from the Fed. That would send the equity market down again. Now the impact on gold, typically, gold relies on a rate cut to happen. But again, it is also an inflationary hedge as well. So if inflation does shoot up really high, then gold could actually benefit out of that as well. So a little bit unclear, I'll be honest with you, in terms of what the direction is, once these numbers gets pushed out. So we will react to it accordingly. And let me just bring out the chart so we can start planning out what to look out for here. Let's start with the euro first. Euro is stable at this point in time. This one here, I think we can straddle this. This is completely fine. A lot of the market is actually in a range-bound market condition, but for the euro, it's really stuck at this point in time. You can take a look at the euro, not really going anywhere. So yeah, this one is not that hard to kind of figure out. It's stuck in a 15 minutes range, as well as the, let me just bring this up and show, no. Rate level, okay, just trying to bring up why is this not, there we go. All right, so this one here is actually still simple. We can still straddle this. I don't really have a problem with straddling this. In terms of the buy stop for this one here, I think about 1.1125 should be about 5. You can have it at 1.1130 just in case it kind of whipsaws around. You know, just to have it a little bit safer, I do want to have it a little bit higher, 1130, and the sell stop for this one here, I want to have this a little bit lower, about 1.1090. And that's pretty much it. It is about 40 pips off range. I think this is stable. I think this is okay, right? This is normal, and I think it's completely fine. So once, you know, one of the stops are triggered, right? If the buy get triggered, you know, cancel your sell, and vice versa. Simple as that. We talk about that in the theory. Right, sterling here. This one here is a little bit unique because I can't really find a good rating on this one here. I wouldn't call this as a good ascending triangle. We did have a little bit of a resistance building up, and you just broke it. Whether or not this is actually sustainable, that's really the question. I wouldn't consider this an ascending triangle at all. In terms of the pattern that we can see here, this is more likely in more or less an ascending channel. So, you know, and since it has rallied up and broken out of that, we're not going to be looking at this as, you know, kind of a broken resistance and whatnot. I really think this is more or less still within a channel at this point in time. So I actually might have to skip the sterling here. We're not really in a situation where we can actually start trading this. You can create a buy stop, but it has to be a lot higher than price here. You can have it here. Okay, just not show quick. There we go. There we go. All right, the buy stop, I wouldn't do the buy stop at this point in time. I would actually cancel this, right? We're just not in a position to create a buy stop on the sterling at this point in time. The dollar yen is also trading in the channel. We will be reactive to this. For gold, this one, unfortunately, we already broke it. It canceled the, it was a little bit of a symmetrical triangle there. It canceled it and actually broke a lot of support. Now we are below some of the key levels for gold. If you are not monitoring the movement for gold, it was at about the key resistance today is basically 32.50, 32.60, and that's basically about the daily pivot there. Daily pivot is actually at 32.57, so we are looking at about 58 to 60 as a main resistance for gold. So we will trade this more in a reactive manner here for gold. But again, as I told you, I think we lost a lot of shine for gold here. This gap here, is it going to be recovered? Yes, it will. But it will be recovered, but not at this point in time. I don't think so, unless we really have a really weird reading on the inflation numbers. I think selling pressure for gold is still there, right? The luster for gold at this point in time is just not there. So does that mean it's game over for gold? No, I think we could correct a little bit lower. And you know, I think I mentioned this in the outlook in terms of the correction level. We were looking at two levels to watch out for this week. It was actually 3,200 and then 3,100. I prefer the 3,100. I think that level there is where we're going to find a lot more buyers. So you know, until that happens, it's going to be really hard for this one to kind of recover. I think it's just a lot of selling pressures right now. And this is on the hourly time frame. The hourly time frame is actually trading inside the channel here, and once we break that channel there, we would actually break below the resistance trend line, below the support trend line. And yeah, we will slide further. We do have a little bit of a temporary support at 3,200, and then below that we got 3,165 and then 3,100. But no go on this one here. I'll be reactive to gold and I'll inform you what's going on. All right, the euro yen and the sterling yen. This one here, I don't normally want to trade this. And sterling yen is out because I think we just broke that. But the euro yen, we're still being capped by a little bit of a resistance there. This could be a potential. Ascending triangle for the euro yen. It is a little bit higher there. If we do want to have our buy stop, it will be a lot higher. It's going to get triggered up about 165. So out of the whole bunch, right? I think the one that we can actually trade is the euro USD, and that's pretty much it. The Aussie, you can trade the Aussie. This one here is, I don't expect a lot of movement here. But you can have it below 64 cents for your sell stop, and the buy stop just about 64.20. This is on a 15-minute time frame. I think this is reasonable. So Aussie, I would do it. New Zealand, I would skip it. Just choose one. Dollar Canadian, dollar Swiss. Unfortunately, we're not going to be able to do anything for those. Okay. So those are the trades that we have here. Data's still about 3 minutes out. I will be reactive on the dollar yen and gold. So if you guys are yapping about gold or whatever, I'm not looking at the chat right now. I'll be looking at the chat in a minute. But dollar yen and gold, we will be reactive to this, and we want to wait and see, what the inflation is, so we can actually process a lot of the information in terms of what the impact is into the market, because of all, the whole tariff situation diffusing inflation as the main focus for the market for the past 2 months. And I think everyone's just going to be back at inflation, watching whether or not inflation is going to go up. I don't have the reaction, or at least the knowledge on in terms of how the market is actually going to react within the certain context that we have here. All right, there's a question. A little finance equity. I need an advice on which asset is not too volatile. Don't trade gold. Gold is volatile, so it has to have stable and clear trading. If it's small way or accumulating profit, I would go with the Euro USD. I think it's stable. In terms of volatility, I think it's stable. Don't even go up to the sterling. I think sterling creates a lot more volatility. You can go with the euro or the Aussie, but really depends on your situation there. Bitcoin's not going to be affected by the inflation numbers, but yeah, does Bitcoin lose a lot of its shine? No, it doesn't. The Bitcoin is considered a risk asset. So, with the whole situation in China diffusing, that's probably why you see that run in Bitcoin. We do see a little bit of a recovery on Bitcoin here. But yeah, at this point in time, would I be placing a buy stop and a sell stop on Bitcoin? Obviously not. Those are not going to be strategies that's going to be suitable in Bitcoin, in terms of how we trade news releases. Okay. All right, that's that. Sterling, we will be reactive to sterling, so don't panic on sterling. I will be trading sterling, but just looking at the current situation here, I'm not really quite sure what to make of it. But yeah, is there a certain level that we would be focusing on? Yeah, there's a little bit of a resistance building up here, about 1.3225, 1.3330. There's a little bit more of a block here. If it fails, then yeah, I think it would be a good short here. Market's expecting a higher inflation. If it misses a lower inflation, would it make a dollar weaker? Market is expecting a flat inflation, right? I'm not expecting a higher inflation. My personal view on this is that yes, we would probably be looking at a potential for a high inflation, but again, numbers for April, right? It's likely going to be skewed. We don't know what it is, but retail sales numbers that's going to be released tomorrow, that's definitely going to be skewed. I think we're going to be looking at a lot of, people buying stuff. All right, data is going to get released in about 20 seconds. Oh, we still got about a minute and a minute and a half here, but just be on the lookout. I think price should be stabilizing at this point in time. We shouldn't be looking at a crazy movement. Gold is also stabilizing at this point in time, which is kind of good and bad per se. Honestly, if I were to, let me just, show you the stochastics on gold here. And if we take a look at it on the hourly time frame, there's a reason why I have more or less a downward projection on this one here, because if we do our fibs, the projections for this one here is that we are finding support, and we actually went a little bit lower than 100% yesterday. So 127.2 is about 3165, 161.2 is about exactly at 3100. So this one here could have that downward push on gold. Intraday, it's stuck. All right, if you ask me what intraday movement is on gold, it is stuck. All right, data is going to get released in 15, 13 seconds, any moment now. But yeah, we will trade reactively on this one here. But for now, pending orders that we have for sure are going to be the Aussie, the Euro Yen for a buy stop, as well as the Euro USD. All right, data is out, and we should see a little bit of a reaction. Aussie got triggered, so I'm gonna cancel my sell stop on this one here. Looking at a lot of flip-flops, and what's the number? What's the reading on this one here? CPI is, I think it's a little bit higher than what the market is expecting, but what's the number? The number is actually lower. It's actually at 2.3%. Monthly rate of change is at 0.2%. Core inflation rate of change is also 0.2%. Core inflation is flat at 2.8%. But that's pretty much it. So we might see a little bit of a confused situation here. Is that going to be looking good for the market? I wasn't expecting 2.3%, I'll be honest with you. I really was expecting a number that's actually going to be a lot higher here. But it is what it is. We are looking at a very violent reaction in the market here. The euro is actually pretty flat. The sterling is it's okay. Dollar yen is obviously going to move a lot. Gold is flip-flopping at this point in time. So, if you guys are wondering what's the current situation with gold here, again, that's basically what I'm looking at for in the long run there. I think there's still downward projections, but you can take a look at the movement for gold here. It was actually flat. It tried to kind of recover for the whole day, and then it flat, and then it just broke earlier. So we are going to be looking at the area about 3250 to 3260 as our main resistance intraday. If price goes back up there, it needs to break 3260. Otherwise, it's not going to go anywhere for gold. But for now, looking at this is not bad. In all honesty, if we take a look at the reactions in the market here, I might actually have to cancel out on the Euro USD because this is not going to go anywhere. I'm not looking at a positive, super positive reaction on the dollar itself at this point in time. The number was a little bit lower, but I don't think this is a number that anyone's going to say, oh, this is the trigger for the FOMC to start cutting interest rate, that inflation is starting to slow down. Again, this I said, this is pre-tariff, right? So we actually don't have the tariff numbers in there as of yet. That would probably be more visible in next month's number. But for now, if you take a look at the initial movement here, I think the US dollar is actually benefiting out of this. So I would get out from the Aussie and the Euro right now. I don't really like the movement. I'm not seeing a lot of movement here. I would rather be out than getting confused here. Let me see if anything is triggered here on the short term here. We do saw that breakout on the Euro here. Initial break on the dollar yen was to the downside, but I think the market kind of recovered really quickly. Sterling as well. Sterling was up, but we're not really seeing a lot of drivers into the market. So is it positive for the US? I think it's actually positive for the US at this point in time. And should we be trading the dollar yen? Probably. I think this is actually very interesting. It's just that it's so high up there. I think we're looking at a little bit of an exhaustion in the market from yesterday's rally at this point in time. I'm not looking at a lot of price movement on the currency market at this point in time. The euro is pretty much flat. The sterling is also pretty much flat. Dollar yen is still in that channel there. I'm not going to be doing anything. The gold is also inside that channel there. I'm not going to be doing anything until it actually breaks out of it. But I have a personal preference that I do still think that there is no reason, and there's more reason not to go in long gold at this point in time, because does the market look at this inflation number and they're going to be cheering for that? Probably, market is probably going to be reactive to this in the short term. That says, Trump is probably right. That's going to boost the confidence and whatnot. We might not need gold to be our safe haven there, and that's probably why you're looking at the dollar yen gaining and gold losing its shine at this point in time. Looking at Bitcoin, it's flat, right? As expected. I'm not going to be looking at a lot of a positive reaction on Bitcoin at this point in time. Just as a disclaimer, you guys can ask me anything about Bitcoin. I'm going to look at it from a technical perspective, but I don't trade Bitcoin per se personally, right? It is a little bit below expectation, but again, these numbers are skewed, right? I don't believe these numbers, but it is what it is. All right, gold. I think we'll make a decision on gold here. We are probably going to be looking for a potential short entries on gold. Let's see if market can pull back up a little bit here. I might want to do a little bit of a limit order here for gold. We would do about 30. I don't even think this is actually going to go up to 32.50. But yeah, you know, if you guys want to do a limit order on gold, I would do a sell limit for gold at 32.50. I think that's reasonable. For the euro, not going to be doing anything. I need price to close outside of the box that we have here. It doesn't close outside of the box. We're not going to be able to trade that. And the sterling at this point in time, I think this is still overall positive, but we are looking at a little bit of the order blocks that we have from here. Unless we clear off that order blocks, we're not going to go anywhere on that, okay? So we need to clear off that order block first on the sterling. Dollar yen, I think this is starting to get a little bit choppy here. So no trade on the dollar yen as well. This is still within that channel, and this is a perfectly fine channel on the 15 minutes, 5 minutes on hourly channel. You know, it's all the same channel that we're looking at here. So we will be reactive once it goes out of the channel there, but the key resistances out there, I think we clear off 148. In fact, I think we would actually look at 148 as a little bit of a floor for the dollar yen at this point in time, right? All right, gold starting to move. We might see short-term gain on gold here. You know, if we go by our own means, you can probably trade this, but just keep in mind, if you want to go long on gold, you can. Just keep in mind that price is currently about 32.45. You're probably going to be looking at about $5, $10 gain. And then you have to be really careful, because once it goes back inside that 50, 60 range on gold, and it will be problematic. So be a little bit more on the careful side here. The Aussies gaining, but we're not looking at that on the euro, which is unfortunate. But the Aussie is sustainable. I think the Aussie is sustainable at this point in time. Shouldn't have closed the Aussie to trade, but it is what it is. We close it, and for now, everything looks good. No problem at all from this side. New Zealand dollar Canadian, not going to be trading those. Dollar Swiss. Dollar Swiss should be gaining up for dollar Swiss. I think overall this is a positive number. I think the market is probably going to react to that positively. Index, not really a strong reaction. I think this is exhausted. There is that imbalance. There is that gap there, needs to be filled by the market there. That was a huge move up yesterday, but the euphoria is fading away. We might see the market kind of correct itself a little bit. So probably not a good idea to trade the index at this point in time. Waiting on, you know, just waiting for the market to open before we can actually do anything. The Nasdaq, do I have Nasdaq here? How come I don't have that here? I think overall for Nasdaq, it should actually be more positive compared to the Dow Jones Industrial Average here. And the reason for that is Nasdaq should be positive. I think the rollback from China yesterday was really more beneficial for you know, the tech sectors, and obviously Mag 7 is going to benefit out of that. Apple was a good run, and you know, they don't really have to worry too much about them having to adjust for iPhone prices. And I believe they were you know, not going to be hiking Apple prices, iPhone prices, you know, with yesterday's rollback. So I think market is pretty much happy with that. But yeah, Nasdaq is different. The US 30 is currently impacted because yesterday Trump signed off the lower prescription thing, which still has to be passed on by Congress, but I think it is going to get passed on. But it weighs down on the pharmaceuticals, and that's going to weigh down on the S&P 500 and the US 30. But Nasdaq, is, you know, a lot of the farmers are not listed in Nasdaq, so Nasdaq is probably not going to be negatively affected or anything like that. Good evening. Yes. Trade war is cooling down. Do we expect dollar index to move to 105? At this point in time, probably not, right? I think that would talks about, you know, whether or not. Let me just bring this up into view here. That, yeah, is this going to be affected by in the short term? Yes, it might benefit out of that, but in the long run, is it going to be good for the dollar? unknown, right? I'll be honest with you, the answer to that is actually very much unknown. And if you take a look at the dollar index on the daily scale here, it's technically still below the Ichimoku cloud. It is still below the moving average there, obviously still below 100 EMAs. I got 75 EMAs, and you guys know that for trends, I use 75 and 100. It's all still below. Take a look at the stochastics and the RSI. The concern I have is that the RSI never skip above 60, right? And even with the rush yesterday, it didn't shoot above 60. And that should be one thing that we are concerned about with how the dollar is the dollar strength okay with the whole tariff thing cooling down? And my answer to that is no. So let me explain. I think I already explained this enough, but the tariff is still up 10%. And that's still the highest tariff imposed by the US. So it's not going to change much. Is it going to hurt the US economy? Yes. Is it going to hurt the US consumer? Yes. Is it going to cause global confusion in the market? I think yes. So I have zero idea, and I think a lot of people are starting to get confused with what Trump is trying to do. I think for him, the whole thing is just to show that he has the power to manipulate the market or move the market at his whims. I think that's basically what he's trying to get the message across, right? But the US dollar is going to push up to 105 at this point in time. It's a very huge ask. We're not even above 102. The key level that we need to cross over is still going to be at 103, right? So we're still very far from that. And even if we hit 103, we're going to be hitting the Ichimoku. We're going to be hitting the EMAs, right? The 75 and 100, it's going to go down to 103. Probably by the end of this month. But if you take a look at the block that we have here in terms of the resistance, if it doesn't clear 103 really quickly and it gets stuck inside that, and it's going to be stuck until June. It's basically a month projection here that we're looking at here. This is a 26 days projection on the Ichimoku cloud here. But yeah, is it, can I make that call right now? No, I cannot make that call right now. I think it's too early to make that call at this point in time. Okay. All right. Anyway, going back to, I think we're looking at a little bit of a movement up on gold here again. I much prefer a sell limit on gold at about 32.50. I really doubt it's actually going to achieve 32.50 for gold here. This is obviously on the 1 minute time frames, and we're looking at shifts in the trend here to the downside. I think pre-market, the 5 minutes, I still believe the EMAs are still positive for the 5 minutes, but it is already below the Ichimoku cloud. So the limit that we have is at about 32.50. Again, that's something that you probably need to watch out for. But 32.50 to 32.60, this is the level going forward to watch out for. If we are not able to clear 32.60, we're not going to push any higher. And if price gets rejected from 32.50, 32.60, you have a much better option to continue shorting gold. So, okay, again, if you want to go long right now for gold, your gains are probably going to be what, $4, $5. If that's your aim, I think that's completely fine. But in terms of your stop loss placement, I think obviously this is going to be all over the place at this point in time. We are kind of halfway through the current move that we have right now. All right, reciprocal tariff delay for 90 days. I'm trying to, it makes my head spinning more than 100 times. Yeah, as I say, 90 days pauses. It's yeah, I don't want to say the S word, but it's crap, right? It causes a lot more confusion, because it brings a lot of uncertainty into the market there. And obviously something to consider as well. All right, there we go. Some key levels that we have here on the euro, for example. I think the euro, as I said, it's stuck. I think it is pushing a little bit higher here for the euro, but we got to be really careful with that fair value gap from yesterday. We had that run from yesterday. A huge drop during that announcement. I think market might correct itself a little bit towards that fair value gap there. I think we are at support 2 daily, probably going to be pulling back to support 1 on the euro. But yeah, I mean, like, do I want to go long the euro, to swing it? Probably not, right? The initial breakout we had, that was for a euro long. but it wasn't really going out of the box from what we have in the initial 50 minutes that we have. So yeah, and then we have that order block, as I say, we still have that order block right now on the euro, likely going to be causing a little bit of a problem. But yeah, is it looking positive for now? It might be positive, but I think there's still resistance building up there. So temporary expectation if you're going long in the euro. Like, don't go crazy thinking this is going to recover to 1.12, 1.13. I don't think that's going to happen. And I think the initial reaction from the CPI number, we actually don't see a lot of volatility in the market there as well. And also, I don't see a lot of liquidity drying up as well. All right, sterling is pulling up a little bit. But again, midpoint on that fair value gap here is coming up at 1.3240. Just at about where the Ichimoku cloud is currently located. Order blocks are not going to be seen until about 1.3280, 1.33. So planet, we're in between. You want to trade, make sure it moves a little bit higher here. We did bounce off the discount for the day, but as it stands, current pricing not that great on the sterling there. Now, dollar yen, obviously we say we want to be a little bit more on the reactive side on the dollar yen there. As I said, dollar yen was actually trading inside that channel that we were looking at, and I still think that we are still inside that channel at this point in time, not really breaking out of anything. But yeah, make sure price gets out of the channel, otherwise not much we can do here. Sterling also, I think we are still inside the channel. As I said, it was initially I thought it was starting to look like an ascending triangle. But ascending triangle doesn't happen in a downtrend, so I think this is actually traded more in a channel rather than anything else. So we're looking at a very strong resistance there. Sorry, we're strong support. Let me get this right. Strong support, but I'm really eyeing for that channel there. On the 15-minute time frame, we're actually hitting the premium. So if price got rejected here, I think this is right about okay. Close to the 1.3250, but it's in the middle of the channel that we have here, so not really something that's actually actionable. All right, any other requests? We still got about 10 minutes time frame here, but from what we have, it's not a lot that we can trade. I think there's a lot more waiting to be seen here. The euro yen wasn't even triggered there. Price wasn't just rallying up high enough. But this is a valid ascending triangle. So, if the euro yen does break this, by all means, I would take that trade on the euro yen. This is a very strong support line that we have here. The sterling yen has a very similar support level as well. The dollar yen, sorry, I think dollar yen actually broke below that channel there we have on the short term. But on the much bigger scale, it is still within that channel that we have on the hourly. All right, dollar yen, I'll skip unless we break this below the hourly time frame. But if price gets stuck inside here, not gonna be touching that. But the euro yen and the sterling yen, these are gonna be your two options. The sterling yen is actually breaking above this. If there's an hourly close above what we have here, above 196 to be exact on the sterling, then yeah. A good consideration to go long on the sterling yen and the euro yen. Again, as everyone thinks that safe haven is not needed, the Japanese yen is probably going to get weaker as well. And we also know that the Bank of Japan is not going to be doing anything. The Bank of Japan is not going to be hiking interest rates. They will be hiking 10 basis points in 2025, but not now. Looking at the current status quo that we have, we still see the Japanese yen being sold off here, just basically on the back of safe haven not needed, right? That's basically the scenario we have here. Same thing with the dollar Swiss as well. What about sterling yen targeting 198 possible? Sterling yen targeting 198 possible if we clear this ascending triangle. Yes. It's not even 198. I believe it is what it is. And only close above that level there. If you're going to be targeting 198 on the sterling yen, I think we can actually target a lot more than 198 on the sterling yen there. I believe we can go for it at 127.2%. That would be about, well, yeah, it is about 198.50, right? So yeah, look, closing above that level there, especially today. And if we have that build-up momentum on the sterling yen, and I think there is a lot of momentum left behind on the sterling yen. I would take it, but as it is right now, I think intraday on the sterling yen, there's a little bit of a conflicting views right now. But yeah, I think we can go a lot higher on the sterling yen, which is unusual. But I'm probably more on the side of the market doesn't need a safe haven. Now, is this permanent? My answer to that is no. In fact, I've been focusing a lot on the safe haven assets from that China talks, and we're not off yet. China's not safe haven was left off, right? Obviously, you saw what happened with India and Pakistan there was that ceasefire, but this ceasefire was violated within hours. It's holding on strong, okay. But India is not buying into that, and I don't really think from the comments coming out from India at this point in time, I don't really think that India is actually accepting this as a ceasefire that's conditional, that's accepted unconditionally by both sides. I think Pakistan is okay. I think Pakistan it's probably more on asking other nations to kind of back them up here. It's like getting bullied by India and stuff like that. But this is a fragile ceasefire that we have here, and that's number one. And obviously, Ukraine, Russia, Zelensky is going to be meeting up with Putin on Thursday. If that happens, I don't know, in Turkey. So we'll see what happens. We're not done yet, As it is, safe haven is not needed, but it's not really too hard to shake the foundation here. And don't forget, for gold, we are still looking at a lot of people that thought, hey, I missed that gold rally, that are going to be buying on gold, right? So, even yesterday with the whole crash on gold there, we saw huge volume building up at 3220 and 3200. In fact, the point of control yesterday, if we take a look at the market pricing, I was actually reading the depth of the market yesterday for gold prices, and the point of control yesterday was actually at 3220. So that's something to watch out for as well. That there are still strong demands for gold down there, But I still think that gold can go a little bit lower. I think pricing at the current price level, either we sustainably break above 3260, we might rally up a little bit, then we'll find sellers at 3300, or price goes down first, and that would be the preferred scenario. The price actually goes down lower, ideally below 3200. Right? And then we're going to find a lot of buyers inside that 3,100 to 3,200 range there. That is something that I like. That would be on gold. Now, the currency market at this point in time, a little bit unstable because we're down for that correction there. But the question that was asked just now was whether or not the US dollar is actually going to get stronger. Let me bring this onto the euro here, right? If we take a look at the euro, sorry, let me just bring up the chart here. So I wanna show you the sterling and the euro here. The status for this one here, especially the euro, right? Euro is holding on strong. And the reason for that is, I think we mentioned this on the outlook, I think we need to clear off a little bit of a short-term resistance. But once we clear off that short-term resistance and we are waiting for the stochastic to turn around, the RSI with that correction there never dipped below 40, and that means the uptrend is still strong, sustainable. The FIBS for the euro is now approaching 61.8%, right? So we're still in a position where the euro could actually benefit as well. This could actually gain. And if price bounces off support 2 this week, able to reclaim support 1, able to close the gap that was caused yesterday, then I expect a rally on the euro. But that's only on the condition that if we can, flip the movement on Monday. But once that happens, then yeah, I think the euro can still benefit. I don't think the US dollar is going to get stronger in the long run. The short-term gain on the dollar, yes, but I think we already saw the market fading away from that euphoria yesterday. on the risk assets there, especially on the stock market. We're not looking at a lot of strong movement on the US 30 and the Nasdaq tonight. Obviously, the US market is not going to be open until about 30 minutes time, but current reaction is that I don't think US dollar strength is going to be there permanently. So just keep that in mind. If you guys are thinking, oh, the whole China situation with the US is a good thing, it should boost the US dollar, I don't think so, because we're still staring down a 10% tariff. And I think a lot of analysts is already putting it out there, and I just want to say it. So Trump basically just hoodwinked the whole world into thinking that, hey, I'm giving you 10%, and I'm the good guy here. 10% is good. No, it's not. 10% was worse than before he actually comes into office. It's not going to help things a lot. It's just going to hurt a lot of people. Simple as that. How does the CPI for the US affect the sterling yen? In all honesty, it's not, right? But the only price reaction that we have is that the sterling is gaining a lot more on the back of this. And if we consider that the sterling is gaining a lot on the back of this, sterling yen is going to benefit from the sterling. I think the euro pound is getting beaten down. You can look at the euro pound. This is on the daily. So the sterling is actually on a stronger case right now. So is this going to be benefiting the sterling yen? I would say so. We're not going to be looking at a stronger order block until that 198 to 198.50. So I'll say, you guys still have a long position on sterling yen. I would say hold it, go for it, go nuts. I think the momentum is still strong. Stochastics above 80, RSI is still above 60. Everything is still pointing strong. I think we're going to be looking at the sterling, really on the stronger side compared to the euro at this point in time. But with the sterling here, obviously you need to watch out for that key resistance there at 1.34. That was September 24 high, and we're still not breaking from last year's high. So just keep that in mind. A huge order block is there. A premium zone is there. So if you want to go long sterling, about 1.34 as a swing, you need to be careful around that area there. Okay? All right. And that's pretty much it for today. Unfortunately, we don't have a lot going on. I think the one position that I would live with is this limit on gold here at 32.50, but I don't expect this level to be hit, in all honesty with you guys. I doubt that we're going to hit that level anytime soon. The data for software inflation, the read here is that this is probably going to be viewed positively by the market today. The FOMC pricing might not shift, but there are going to be traders out there that think, I don't care what it is. Software inflation, good for the market, good for the economy. Trump is probably in the right direction with whatever he's saying, that inflation is lower. I can 100% guarantee right now Trump is currently in the Middle East, but you will find a Truth Social post today by him saying that inflation is too late, it's down, and he's going to mention Mr. Too Late tonight. All right, I can guarantee you that he will post it tonight with the latest CPI numbers pointing to a lower inflation. He will post it and will probably say, I told you so. Inflation is down, egg prices are down, right? And then Mr. Too Late is always too late. I'm just waiting for that Truth Social. I don't know if he's posted it by now, but he just got his new private jet and whatnot, but he is in the Middle East right now. But I can guarantee you will see that post from Trump today. This is him. All right, that's pretty much it for the session tonight, guys. And really wish you good luck there. Just trade this carefully, navigate this carefully. Wasn't really expecting a lower inflation number, but again, as I said, the inflation number, in all honesty, for the month of April, not going to have a huge impact. May and June inflation number is probably going to be what the Fed is going to be watching first before making their economic projections, for Q3 onwards. But the results from Q2, it's going to be very important. Again, April, we're not going to be looking at significant changes on the data that we have here. Again, a lot of these numbers are going to be skewed. The retail sales numbers are going to be skewed tomorrow. I think they're expecting a lower number tomorrow. You should be looking at a higher retail sales number from the US. So, you know, you hear it here first, but yeah, I think we're going to be looking at the skewed data for April's number. And what matters more, it's probably next month's number. Okay? All right, guys, good luck to your trades, and I'll see you next month.